Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News9, where we bring to you the lowdown of the day's action on the Lal Street. Now, Indian markets kicked off the week on a volatile note with Nifty ending Monday's trading session in the red. The headliners now opened higher and continue to trade in the green in the morning trade and the mid-morning session as well. However, in the afternoon trade, somewhere around the 2 p.m. mark, we witnessed a sharp sell-off in select heavyweight stocks like Reliance Industries and Bharti Airtel, which pulled the headliners lower, and the indices ultimately settled today's trade in the red. Now, Nifty at close was down 0.38%. It ended the session at 21,771 mark. On a closing basis, the index took support at the 61.8% retracement level, which by the way, remember on Friday we had put out as a crucial support for this week. Remember, we had also said on Friday that the headliners could see some bit of a selling pressure around the 22,000 level, given the formation of a shooting star pattern as well as a double top on the daily price charts for Nifty, and that's actually what happened today. Now, the question really is, will this selling pressure continue from here on? Now, if it does, if we see further selling from here on, 21,630 to 640 will provide a crucial support or a cushion for the index, as that coincides with the 50% retracement level and the 20-day moving average. On the upside, 21,912 will be a key hurdle to take out, and that is a 78.6% retracement level. And beyond that, 21,900 to 22,000, there are multiple small resistance areas which the market will have to conquer to make that dash above the 22,000 mark on a significant basis. Moving on, Sensex also ended today's trade with a 350 point or a 0.5 percent point cut to settle below the 72,000 mark. The broader markets were relative outperformers in Monday's session. The mid-cap index, after making a record high for the fourth straight session, ended with a cut of about 0.14% to end just above the 48,400 mark. The small cap index, however, ended in the green. The index gained about 0.3% and also made a record high today. Its fifth straight day of making a record high. And volatility index, now India VIX saw a sharp spike in Monday's trade. The index surged over 6% higher to settle at 15.62 mark, as investors perhaps turned cautious ahead of RBI policy outcome, which comes out later this week, as well as the ongoing earnings season. Moving on to the sectors, auto, pharma stocks shine. Both indices gained 1 to 2% and scaled their respective record highs as well. On the other side, FMCG, banks, ITs dragged the market lower. But with that, let's also bring on board Mr. Rohit Srivastava, founder and market strategist at IndiaCharts.com. So, a very wobbly start to trading for the Indian markets, and one of the things that I think surprised me at least was the spike in India VIX. Now, one would assume that since we the budget is behind us, US Fed's policy decision is behind us, volatility will come down, but that's not the case. What's making investors jittery at this point, sir?
The one-sided move that we've seen in the market, specifically in certain sectors, and of course we are heading into the national election, a lot of which has been priced in on the basis that, well, the existing regime is likely to continue. So it's always a period of over-enthusiasm around the budget, and you do see markets cool off many times seasonally from this period into March. I think that's what some people may be anticipating, which is what the VIX is reflecting. Essentially, people are buying protection against the market in the near term, perceiving that, yeah, there may be some risk to the downside. So many reasons to think about that, apart from, global reasons. There are, the idea that, well, spending has really not increased as much as it had last year. And that slight downtick in the speed at which they were expanding does also mean that, well, if the market has run ahead of itself, it's possibly time to correct.
All right, and what's your overall view of the markets at this point in time? Can we take out 22,000 once again and perhaps move higher from here on, or is some bit of a correction going to happen over the next couple of sessions or few sessions?
No, I wouldn't say only few sessions. I think I'm saying all the way down to March. This is a seasonally weak period. So we should broadly be expecting a correction, whether you make it to a new high or not. So that is more like a short-term aberration that may or may not happen. I think if we fall below 21,648, which is the previous swing low we made on the day of the budget, I think. No, yeah, on the day of the budget, that's right. If we break the budget day low, let's say, then that would be a clear sign that we are not going to go and close above 22,000. Till that happens, it is an open case. It can happen. It need not happen, but it's not certain. The other thing which will set the course will be the small cap index that again closed positive today. So this is probably the 7th or 8th consecutive day that it has closed positive. And when we see that trend also reverse, it would be a sign that possibly the run in the small caps or the small stocks is actually coming to a close. So these are two things to watch out for: a reversal in the small cap and a break below 21,648.
All right, and macro indicators, we were just talking about the global markets also. The macro indicators in the US, now they are showing that the economy remains healthy and the chances of recession, at least for now, are slim to none. I mean, at least from what I understand, that this would mean is that Fed may not go or may not be in a hurry to cut interest rates, and monetary easing could only be backloaded. And in light of all that, we have seen a surge in the dollar index and a pickup in the 10-year, the US 10-year treasury yields as well. So do you think that that could lead to some bit of a selling pressure from FIIs in emerging markets like India? I mean, essentially what I'm trying to ask is that, is good news for US economy bad news for Indian equities?
Not only Indian equities, I mean, it could be bad news for them as well. The whole idea that US is or isn't heading into a recession itself, I think, is a fractured mandate, because different data points may point in different directions. I was just looking at a chart on Twitter, which is a leading index of 10 indicators, which is already back to the 2022 lows. So this is a very huge divergence when you broadly put it all together. There are certain segments where you see strength. Definitely government spending helped, because the last quarter saw very strong GDP growth on government spending. But when you look at the earnings performance, for example, the Russell 2000 pack of stocks has a earnings so far that have come out. I think more than 70% of companies have reported this last week in the US, minus 25% as a group. But the S&P, of course, has earnings growing at just flattish, very very close to. I'm sorry, very very close to around 1%. So that's not really great growth to talk home about. And if we are really not looking at great growth, then what are we really pricing in? We are essentially pricing in free money. That is, interest rates will go down because things are slowing and inflation has come down, and therefore liquidity will keep driving the market up. So the essential bet here is on liquidity remaining. The problem, though, is that because the US has such a large borrowing program, bringing down interest rates just on the basis of inflation is not going to be easy. And that's, I think, the surprise that people got in last week's Fed meeting, that they backed off from the idea that they would cut rates in March, because they are watching the bond market. And if the bond market is not yet indicating lower yields beyond a point, then the risk is that the higher borrowing program will actually push yields higher in the months to come. And that, according to me, is the negative trigger, not just for US equities, but in Indian equities as well. We will, of course, watch that trend. We need to watch bond yields on a day-to-day basis. The dollar index also, the dollar index, in fact, is already started to, head higher. It didn't fall that much, along with bond yields. So that's probably a divergence that we saw in the last week. Also an indication that, markets are not really anticipating yields to go down much. And on a monthly chart, we can say that the bond prices could not really cross the 20-month average. So again, there we are not completely out of the woods.
All right, and one of the bigger stories that is playing out in India, is that the Paytm crisis. I mean, I just want to get your take on the entire situation of things, because over the course of the week it has evolved from being a compliance issue to a potential corporate governance issue, with reports even claiming that the company did not have the necessary firewalls required between the payments bank and 197 communications. What's your overall assessment of this crisis that Paytm has found itself in?
Yeah, it's see, on the one hand, it's unfortunate, but many times when companies are trying to grow, if regulation is initially not that strong, they do take steps which they can to grow quickly in every direction. But of course, banking is a much more regulated sector, so any kind of flaw that comes to notice becomes a huge negative, and that is what is happening right now. So that's only, I'll say it's unfortunate, but the approach to, and so this takes me back to my approach to any newly listed company, we typically do not, really invest in that till it has been through one bear market. This is my personal view towards, in general. I'm not saying Paytm in specific, but in general, we just avoid it because sometimes at the time of IPOs, because of all the investment banking relationships, you may or may not necessarily, be in the best place as far as prices are concerned. So it's always good to wait it out, let there be a corrective phase in markets after the listing, reassess it a year or two later, and then if you think it's a great, company, then you really invest. Now, that's not to say that Paytm was not a great business. We all use Paytm payments every day. I do it all the time. So in that sense, I feel I should be an investor in Paytm. But I'm not yet. So I've been waiting for a crisis, and this is a good crisis to get me a good price to really get started on that front. So, so I will invest at some point of time at my price in this company, because I don't think it's going to shut down. It's just that they've unfortunately taken some, missteps in the attempt to grow quickly, which they will have to correct over time and, get back on foot.
And is the price that you would be willing to invest in Paytm, is that very close? Because the stock has corrected 40 to 42% in the course of just 3 sessions, sir.
No, I shouldn't give advice online because we don't do that. But at some level, let it cool off. It's cooling off now. Then the negative news will settle in. Prices will start showing some kind of positive divergence at the lows, and then we'll get interested.
All right. And also, I mean, keeping it with Paytm, just the business side of things, not the stock particularly, do you think, or do you, are you assessing a possibility that their banking license could be revoked after that February 29th deadline? And can even Paytm survive without its banking business?
Yeah, a couple of tough questions. I would hope not. I would hope that they can get over it. At this point of time, there's no talk of revoking the license. So I believe that that's not going to be the case. It's going to be more of, you can put up a fine, or you can do something like that, and tell them to get their things in order before they come back. Maybe there'll be some scrutiny to that extent, but it should get resolved is what I feel.
All right. And I mean, we just mentioned how the broader markets, now the rally is continuing over there, but heavyweight stocks, now they are also participating in that rally, and we have seen counters like Reliance, HDFC Bank, to name a few, participate in that rally. So what should be the focus perhaps going forward, considering that there is a lot of uncertainty? Would you keep your investing bias towards large caps than the broader markets?
Well, HDFC Bank is actually hardly given any returns. It's been significantly down since its results. Reliance has definitely been a performer. So the approach that I'm taking is keep creating cash into this rally. Places which are become over enthusiastic, like for example PSU stocks, right? There's too much enthusiasm around PSU stocks. To just give you an indication, the RSI indicator on weekly charts is actually at 93 for this week. And on the monthly chart also, it's at around 91. Now, 93 is the highest reading on the Nifty PSE index all time. And because that doesn't have historical data, if I take the BSE PSU index, it has history all the way back to 2000. And 2003 is the last time we actually had a reading of 93. And the immediate effect of that was the following week, the index dropped by 10%. So one thing is waiting for it to correct short term so that at least that high reading on the weekly level comes off. Second is being able to gauge whether we have overdone it, for quite a while. Is it just going to be a 1 week correction or a multi-week correction? And I would think PSUs really need a multi-week pause at some point of time. So when you see such extended readings, you don't want to really be in that segment, or you want to at least book out to some degree and wait for a better price. And that is, I think, the overall logic with the markets also, that this is a seasonal period where you do get a peak. It's good to create cash and recheck your thoughts in terms of allocations into March. The only sector which is a little interesting, I think, is the oil marketing companies. And the reason for that is that they do tend to have an inverse correlation towards oil. And because of that, sometimes they might fall less or might even go up. They have been going up recently, but they can sometimes fall less. We saw that even in the 2008 bear market, oil prices went down, from $130 all the way down to $20, and OMCs at some point of time stopped declining and tried to bounce back. In 2013-15, we actually saw the oil marketing companies do excessively well when post-Libya oil prices started to come down. This time around, we are seeing that post-Russia, once oil prices are slowly coming down and not picking up, the OMCs are actually doing pretty well. So I think that's probably the only space I can think of now that does well for completely different reasons.
That's a view coming in from Mr. Rohit Srivastava. Sir, always great insights from you. Thank you for joining us here on News9.
Pleasure. Thank you for having me.
But before we wrap things up, Bharti Airtel has just come out with its December quarter numbers, and the numbers are looking, it's like it's a miss on at least on the profitability front, but on a quarter-on-quarter basis, the profit figure has surged by about 82%, coming in at 2,442 crore in the December quarter versus 1,340 crore in the September quarter. Although Street was estimating the figure to come somewhere around the 3,000 crore mark. So it's a miss on the profitability front. Revenue is pretty much in line with what the Street was expecting. The figure stands at around 37,900 crore for the December quarter versus 37,043 crore in the previous quarter. So about a 2% quarter-on-quarter jump. And the expectation was that the revenue figure will come somewhere around the 37,800 to 38,000 crore mark. So as far as revenue is concerned, it's pretty much in line with what the Street was expecting. EBITDA, earnings before interest, tax, depreciation and amortization, that is slightly ahead of the expectations. The Street was expecting the figure of around 19,800 crore. We have in fact, Bharti Airtel has in fact reported a figure in excess of 20,000 crore and a 1.9% jump on a quarter-on-quarter basis. Margin has also improved slightly, and that comes in at around 52.9% for the quarter gone by. But with that, it's a wrap in this edition of Last Tick. Keep watching News9.
हमारी नारी शक्ति को सशक्त करने से ही देश सशक्त होने वाला है।
हर महीने महिलाओं को 1,500 रुपए प्रति माह दिलवाया जाएगा।
What Nitish Kumar did to provide cycle to girls, so they could safely, quickly move out of the house, go to school and quickly come back. Ching, 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 ching.
माँ अन्नपूर्णा तू ही, माँ अन्नपूर्णा है तू ही वीणा वादनी, हे शक्ति स्वरूपा जगदम्बा, हे नारी तू